Welcome to Edison TV. I'm here with Simon Goodson, Director of Investor Relations at Rolls-Royce. Welcome, Simon.
Thank
you. Could you tell us a little bit more about Rolls-Royce?
Yes, sure. I think for a company that was founded in 1906, you could be forgiven for thinking that Rolls-Royce is quite a mature company today, when in fact, despite having a record order book, record revenue, record profit, we really are still in our adolescent years at the foothills of major growth.
So why are you so confident of doubling the revenue in the next decade?
Well, Emily, we are at the start of the largest wide-body fleet replacement and expansion cycle in history. So having invested in technology now for decades, we're able to use that technology to make engine modules and indeed whole engines that will be powering the aircraft of the future.
And what is your competitive edge in technology?
Well, history tells you that you have to invest in technology as a continuum over a long period of time. What is less well understood is that technology, the investment in technology, is essentially headcount. Around 75% of what we spend on research and development is headcount. So our competitive edge has to be our people, our intellectual property, if you like, and we will continue to invest in that as we go forward.
And what does your new assembly facility in Singapore offer?
Well, firstly, up until recently, we've had the ability to assemble up to 300 large wide-body engines a year. What Singapore offers us is the ability to double that capacity and use the latest, leanest manufacturing processes.
So, can you tell me what you're doing to improve Energy's financial performance?
Yes, certainly. Energy is essentially 5 businesses. The first, oil and gas, where we essentially have aeroderivative technology that pushes stuff from the wellhead to the refinery, makes up 2/3 of the revenue and all of the profit. So you can see that the other 4 businesses are essentially weighing heavily on its financial performance. Power generation is essentially subscale, has had some technology issues in recent years, and those have impacted on its ability to serve its customers well. Technology issues are resolved, but we need to look at how we deal with the issues of scale. And John Rishton, the new Chief Executive, has made it clear that all options exist for that. The other 3 businesses, low-carbon businesses, we've decided to sell Tidal to Alstom because it doesn't serve our strengths. We've allowed LG to invest 51% in fuel cells, and we still think civil nuclear, where we do a lot of complicated stuff to make reactors safer, is a business for the future.
And what does Tagum add to the group?
Emily, essentially portfolio. Tagum adds high-speed diesel and gas reciprocating engine technology to our existing gas turbine and medium-speed diesel capability, which complements both our marine and our energy business segments. For instance, in marine, where we design a wide array of vessels in offshore oil and gas, in specialist merchant and in naval, we now have the ability to design a much broader complement of vessels. In energy, for instance, in power generation, we now have the ability to offer a variety of different power generation products.
And moving on to capital allocation, how would you describe your approach to managing the balance sheet?
Well, we've stopped having to explain in recent years the need to have a strong balance sheet, especially in the years after 2008. I think it's fair to say, though, that we're in an industry in which we're making some very long-term bets and against some very big competitors. So our customers want to know that we're going to be around for the long term. Therefore, having a balance sheet is immensely important for that. It's also important to take advantage of opportunities that come along the way. If we choose to acquire or dispose of companies, then again we will need a strong balance sheet to effect that. And certainly maintaining an investment grade rating is critical if we are to have access to the global debt markets.
So are there areas of the group that you think deserve more attention?
Emily, I think it's simply scale. I think it's easy to talk about a record order book and be wowed. However, I would ask the question, what is not in the order book today that investors might reasonably think could come along? For instance, in the A350 aircraft program, in which we have either a sole or exclusive position on the first 600 aircraft, there are a further 1,400 aircraft in the forecast market size. it is now looking increasingly less likely that another engine manufacturer is going to play. That would mean another at least 2,500 engines that we would have on top of all the other programs in our civil aerospace business.
Simon Goodson of Rolls-Royce, thank you very much. And for more information, please visit the Edison website.